Chris Conway from the Australian Stock Report live in our Melbourne studio for you this morning. Chris, talking levels, talking this again figure that we've become slightly obsessed with, which is 5,200. It's kind of one that we've flirted with, crossed and then retraced. What's your view on that? What is it telling you more broadly?
Good morning, Carson. Yeah, look, it's nice to see a bounce off the 5,200 level this morning. I think we made it down to 51.92 yesterday or the day before. So, as you said in the lead-up, clearly some support there. And look, I think we still get a bit of a rally into the end of the year, the fabled Santa Claus rally. Some stats show that over the last 20 years, we've had a rise in December on 15 of 20 occasions, which is the best percentage in terms of strike rate for a rise. And that the month of December, again, over that 20-year period, has delivered the second best average return. So clearly some support at 5,200. A bit unexpected today, given the lacklustre leads from the US session overnight and the fact that US markets are closed tonight and a half day on Friday. But encouraging to see. As I said, I think there's support there. I think we move higher.
It's not going to be driven higher by any help from the materials, is it? Far from it. This will be a push higher only by the banks and the banks alone.
I would think so, most definitely. Look, the commodities space is in awful trouble at the moment. There's structural oversupplies in a lot of key commodity markets, iron ore, oil. We know that copper's hitting, fresh multi-year lows. Yeah, I don't think you're going to get too much support there. I think the best you can hope for is some stabilisation in those commodity prices, and for the sector to not head any lower between now and into the end of the year. So, yep, totally agree with you on that one. No support from commodities, will likely be driven by the banks. And, I think it's all also centring around the fact that, I think markets have come to terms with the fact that we're getting a rate rise in December from the Fed. I don't think anyone, is really questioning that. And a lot of traders and indeed investors out there are playing that US dollar strength theme.
When do you see the much telegraphed pullback from that overcrowded trade?
Well, I must say I'm starting to see a few signs that are, starting to raise my eyebrows. There were some stocks that I talked about last week playing the US dollar theme: Aristocrat, Sydney Airports, Magellan. Magellan has just gone from strength to strength. It's bubbling along very nicely, looking very frothy. But the US dollar hasn't pressed higher. The Dixie, the basket of US currencies, is hovering near 12-month highs. It hasn't followed suit. So you've got local traders playing that US dollar theme, but the underlying catalyst, the greenback, is struggling to press higher. And when there's that divergence there, like we're seeing now, like I said, my eyebrows start to get raised a little bit, because, yeah, it does mean that potentially the trade is overcrowded. And that if we don't get the expected result with further US dollar strength coming out of the Fed decision, well, there's the chance that that trade collapses pretty quickly. So I think traders and investors who are playing that theme, and look, I think it is the right theme to play, but just be very prepared to hit the exit button if it doesn't all pan out exactly as expected.
Because define collapse in a cross-rate sense, greenback v dollar, a dollar.
Well, it's not so much the cross rate that's the concern. It's that the share prices and those shares that are playing, or local traders and investors are playing that US dollar theme, are running away from the underlying catalyst. So I think all it would take would be the greenback not to press considerably higher coming out of the Fed. And that would see some of those ideas about playing the US dollar theme come back to par.
Have you got a sense as to, even then on coming back to par, what that would mean for a Magellan, for instance? It's sitting at a yearly high even as we speak.
Yeah, it's stronger again this morning. Yeah, look, I mean, in terms of a share price dip, who knows? Again, it will all depend on what the greenback does. If it holds, well, there's no reason why it needs to give up an intense amount of gains, but clearly that stock right now appears to be overbought, and clearly everyone appears to be playing that US dollar strength theme. That's a great company. They have actually been positioning their portfolios and their investments for the rate hike. So again, they're doing all the right things. They're following all the right economic theory. It's just that if we don't get that follow through on the decision, then a pullback is really inevitable.
So
but still a great company.
But the multiple needs to kind of reflect the fact that it is perhaps an overbought territory. It needs to all correct downwards. But I mean, could that mean as much as a 5% move lower in aggregate, or what?
Yeah, well, again, like I said, it will depend on what the greenback does. But yeah, 5% is not out of the question. 10% is probably a little bit too extreme. But yeah, 5% pullback. And I think traders are waiting for that as well, traders and investors. You know, it is a bit of a market darling at the moment. Like you said, putting fresh all-time highs every day. So I think those on the sidelines wanting to get in are definitely waiting for that stock to come back to earth.
Yeah, it's understandable that you're long on Computer Chef for all the reasons stated, but also you bought RCG, correct? Leading into the AGM, not at the other end of it. What was behind that strategy? Going into the AGM, you were buying before you'd heard kind of even outlook.
Yeah, so the expectation was that the Accent acquisition would continue to do extremely well. Management had been and continue to be very conservative in terms of sales growth there. The expectation is that they will revise upwards their sales in FY16 and some further cost synergies could come in FY17. So yeah, it was more management's low expectations, or not talking down, but yeah, lower expectations than what we were seeing. Hence why we were happy to buy it into the AGM. I think it popped 6% on the morning of the AGM, has pulled back a little bit, and then again is higher this morning. Yeah. But the long-term story on that one is great. All their business units are performing exceptionally well, above the market averages. Like I said, we see earnings revisions in the offing, and yeah, look, we like the stock target 170, so we're happy to be buyers.
Any new CEO at Woolworths, will you like the fact that he would continue what his chairman today has deemed best practice, which is to close the doors on any transparency with what's said on strategy?
Sorry, Carson, I just missed that.
I'll try it again. Are you accepting that the approach employed today by the chair of Woolies is an acceptable one for a public company, to slam the door on the media, to go quiet on where the direction is for this company that's in many Australians' portfolios?
Look, I don't like it, to be perfectly honest, but I can understand the reason why they're doing it is because well, it's going to be very feisty. And I'm sure...
If you can't stand the heat in the kitchen, get out.
Well, that's what they've done. Well, they haven't got out of the kitchen.
No, they have not at all got out. They've not even told us who the chef is.
Well, the thing is, they don't want, and I can understand, again, considering their marketing department has made so many blunders in recent times, they don't want the 6 o'clock news headlined with, you know, irate investors yelling and screaming, which is probably, you know, well, is certainly a possible outcome.
You can't blame your marketing department, though, can you? Come on, that's about as low as it gets. I mean, if you're really searching for, you know, for kind of victims, that's who you go for.
I think to some extent, and don't get me wrong, Masters and Big W and a few other things, a lack of a CEO, they're all contributors, but the marketing department can be blamed. If you want to annoy the Australian consumer, well, go and insult our fallen war heroes. I mean, that's the biggest blunder of the last 10 years.
I mean, it's well documented,
but in fairness, campaign.
Yeah, I mean, it's a strategic blunder, though, much larger than just the marketing department, isn't it?
Yeah, I do agree with that. As I said, there are certainly other elements in play, but I think, and I heard another analyst say it this morning, and it's something I've said before on the show, Woolworth still has some incredible assets. You know, they're going through a very tough period at the moment, predominantly because of Masters.
So why not talk about the incredible assets today? Why not use this as the opportunity to remind people what you've got rather than sledge it? Because so long as they go quietly, they will be hammered.
Well, I think that's what they should do. That's certainly what they should do. You know, again though, trying to get that message across when you've got irate investors yelling and screaming at you, and let's face it, that's what's going to headline the 6 o'clock news, not the part buried 30 minutes of the meeting saying we've still got quality world-class assets, we've still got quality world-class margins.
Well, those people still have to make an exit from the building. They still have to leave the AGM, so they will be approached. They will be spoken to. To think that they will go quietly into the night is incredibly naive for people at the very top of the company.
I do agree with that, but hopefully by the end of the AGM, and maybe this is what Woolworths is counting on, is that some of those more irate investors will be placated somewhat. I don't necessarily think that's the case, and don't get me wrong, I do agree with you, Carson. I don't like they're shutting the doors. I think they're hiding away, they're squirreling away, and the best way to get in front of all these problems is to stand up, chest out, and say, yes, we do have some problems, here's the plan, here's what we're going to do to fix it, and here's why you should stay on board with the company. And you know, whether they get the chance to do that or not remains to be seen.
Well said, Chris. Thank you as always. Appreciate it. Chris Conway there from Australian Stock Report. Let's